Commodities investing is about buying and holding physical goods that have value. These include natural resources like gold, oil, and agricultural products. Investing in commodities provides exposure to the real economy and helps diversify investment portfolios by adding assets that behave differently than stocks and bonds. Commodities are basic goods or raw materials that are interchangeable with other goods of the same type. Examples include precious metals, energy products, and agricultural crops. They are standardized and traded on global exchanges, which makes buying and selling easier and more transparent. There are three main categories of commodities. Precious metals include gold, silver, and platinum. Energy commodities consist of crude oil and natural gas. Agricultural commodities cover crops like wheat, corn, and soybeans. Understanding these types helps investors choose the right commodities for their goals. Investing in commodities helps diversify an investment portfolio because their price movements often differ from stocks and bonds. Commodities act as a hedge against inflation by preserving purchasing power when currency values drop. They can also offer high returns during periods of market volatility, balancing risks and rewards. Physical gold investment means owning gold bars or coins. Gold is a timeless store of value during times of economic uncertainty. Investors should consider the costs of storing and insuring physical gold, as these factors affect overall profitability. Liquidity varies depending on the form of gold owned. Most investors gain exposure to oil through futures contracts or exchange-traded funds that track oil prices. Physical ownership of oil is generally impractical because of storage and transportation challenges. Oil prices are highly volatile due to geopolitical events and shifts in supply and demand, making it a dynamic investment. Agricultural commodities include crops such as wheat, corn, and soybeans. Investors can access agricultural markets through futures contracts, ETFs, or stocks of companies involved in agriculture. Prices of these commodities are affected by weather patterns, seasonal cycles, and global demand, making them an important diversification tool. Commodities include precious metals, energy products, and agricultural goods. They provide valuable portfolio diversification and help protect against inflation. Investment methods include physical ownership, futures contracts, and exchange-traded funds. Understanding the risks, such as market volatility and storage costs, is essential for successful commodities investing.
If you like this video, hit that like button and don't forget to subscribe. Visit CodeLucky.com for more such useful content.